This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, February 26, 2016. Euro dollar. So it seems the euro has found a little bit of a base right now after the market was unable to close below the key psychological barrier and previous resistance zone at 110. At this point, the recent break higher does suggest that the market could be poised for additional upside over the coming sessions before it considers a lower top and fresh downside. At this point, only a close back below 110 would put the immediate pressure back on the downside. Sterling dollar. So cable has done a good job of recovering out from this week's recent 7-year low, with the market now poised for a bit more of a correction higher before it considers fresh downside. But ultimately, the recent break below that previous 40-80 7-year low was a significant development this week and does set the stage for a move down towards the 135 area, which is a measured move objective and also coinciding with the 2009 base over the coming days and weeks. Dollar yen. So dollar yen has done a good job of consolidating off recent multi-month lows at 110.98, and while the market holds below 116, the pressure remains on the downside for a retest and break of 110.98, potentially exposing a move towards the 107 area further down. At this point, a break back above 115.97 or 116 would be required to take the immediate pressure off the downside. Euro Swiss. So despite setbacks in Euro Swiss over the past several days, the market is still trading within a broader recovery outlook and is expected to put in a higher low ahead of what should be the next major upside extension beyond 112. Ultimately, only back below 107.15 would compromise this constructive outlook for Euro Swiss. Aussie dollar. So Aussie is traded up towards a key 78.6 Fib retracement at 72.65 off the 73.85 to recent multi-year low 68.27 move. But any additional upside should prove hard to come by, with the market seen putting in a medium-term lower top ahead of the next major downside extension back towards and eventually below 68.27. Only a close back above 73.85 would compromise this bearish outlook. Dollar CAD. So dollar CAD has seen some sharp setbacks in recent trade, with the market now dropping below critical rising trendline support off the May 2015 low at around the 136 area. At this point, there's risk for deeper setbacks in the sessions ahead towards some critical previous resistance now turned support at 134.57 in the form of that high that we saw back on the 29th of September of 2015. Really, a break back above recent highs now at 138.59, 138.60 would be required to take the immediate pressure off the downside, though ultimately this market does still trade within a broader uptrend. Kiwi dollar. So Kiwi has cleared some key stops above 67.52 on Friday, though the market should see limited additional gains from here, with the market expected to continue to be very well capped into rallies ahead of critical resistance at 69. At this point, only back above 69 would compromise the bearish outlook, the overall bearish outlook for Kiwi dollar, and the market should be stalling out in favor of the next lower top and fresh downside extension. Look for a break back below 65.46 to confirm and accelerate towards next key support at 63.47 further down. At this point, for Friday, it's important to pay attention to the 67.52 level that was broken to see if the market can close above or below. Most likely, with the pressure remaining on the downside, again, any rally should be very well capped in this market, with only a break back above 69 to compromise the bearish outlook. SPX 500. So we're seeing a bit of a correction in the S&P 500 out from recent multi-month lows at 1808, though ultimately this move higher is a correction and should put in a lower top, ideally below or into previous support now turn resistance in the form of that low that we saw, that previous base from the 14th of December at 1993. Ultimately, only back above 2000 would compromise the outlook, and a lower top is favored for the next downside extension below 1808 and towards 1700 further down. Gold. So gold remains highly constructive following the recent break back above 1200, and this puts the focus on the 1307 2015 high from January further up. At this point, look for any setbacks to be very well supported ahead of 1190, with only a close back below that level to compromise the bullish outlook, the newly adopted bullish outlook for gold.